Hey guys, welcome to another video lesson that I'm sharing, or a rule, a concept. There's no lesson because nobody knows anything. I don't know anything. You don't know anything. We're all a bunch of clueless people. But we're trying to make a profit. We're trying to gain. We have these things called dollars, right? These Federal Reserve notes. We got to put them somewhere. If we don't need them right away, we save them. When we save them, we have choices. Well, platinum is a choice, and I have some platinum. And the concept today is letting your winners run, because platinum is up pretty decent today. It's up 4.5% so far, and I've been a bull since it started showing strength. Actually, I even bought it before that, and the reason being, I have a PPLT, but if you look at let's look at the futures contract, and let's look at the monthly. If we look at the monthly time frame, platinum has been beaten up for at least 8 years, since 20, depending where you start counting, but 2011, so that's about 9 to 10 years, and it finally showed signs of strength. There's a lot of volume in it, and there's still a lot of potential upside in it. The highs are at $2,000 and some. So there's a lot of potential for it to go up. And the idea is that the debt and the money printing and the size of the supply of money increasing and the potential use of it would increase demand for it. If you look at it now, from the red to the green, that's bullish, that's up. After the sell-off we had last year, 2020, we're up quite a bit, from below 700 to 1247 right now. So the concept is, what do you do when you have a winner? What do you do when you're winning? What do you do when you were right? Well, you have a winner, and the rule is, you have to let your winner run. You have to let your winners run when you're right, and it's just so hard to do. I mess this up all the time. When you have a winner, like you do right here, this is on the weekly, here is the daily. It's so tempting to try to avoid losses. But the problem is, we don't know. We have no idea. We're not geniuses. We don't know. And we're having an up day. It could definitely fall. It could definitely keep going. If you look at the next technical level, just to kind of give us a clue, we just passed this recent technical level, so that would be the support. It could pull back. It could also just pull back to the old 1000. There's no telling. The upside is that 1400 to 1500 level. So when you're in a working trade and it's doing everything you want it to do, you gotta give it room. You gotta look above. If there's still targets above, you just kind of have to wait. The risk I would allow for it would be the highs just below, or some level of support. So that would be either the 50-day moving average or the candles where it hesitated before. So that's the only thing you can do until you see this pull back, or you see selling, because that's the other thing. There's a lot of volume, especially in the PPLT, which is a better one. There's 2 ETFs, but the PPLT has a lot of volume. So you'd have to give it at least some slack. Even below that moving average would still be bullish. So that's the problem. There's no spot where you say, oh, that was it, gotta get rid of it. The only choice is, you can reduce a little. Let's say you've got 100 shares, you might reduce a third, you might reduce a quarter, and you for sure lock in that price. Problem is, it might keep going and you might regret it. The alternative situation is that you sell a little bit and it goes down, and then you're glad You sold some, but you wish you sold more. If we look at the SLV ETF, it had a similar situation. And let me just see if I can, I don't want that. I want to just kind of zoom in. When it took off, it had these gaps, these runaway gaps, and all of those prices looked like a good time to sell. And if you sold too early, you left some money on the table. So you have to let it run. You have to let it run. You have to let it run. You have to have a stop below. You got to have at least a mental stop where you say enough is enough. So what happens is it goes up. Usually there's like a double top for hesitation, but you'll see the indicator start to roll over. And then in silver's case, it wasn't a bad idea to just end up holding it. It turned out that the trend just went sideways, and that's where silver is right now. And silver looks like it's going to want to do a breakout. So one of the strategies I always talk about is if you're long something and you're kind of nervous, you put a stop at or below the moving averages. So like somewhere in that zone, and you'll get stopped out, and that'll give you a chance to reconsider. So then to get back in, you put stops above the recent highs or at the top highs, the short-term highs, and that's how you'll get stopped back in. And right now, that's where we're at. It's in play again. So if that's in play, we're gonna look to retest the highs until we break down from that 50-day moving average, and then ultimately the 200-day moving average. That'll be the end of the whole trend. That'll be the end of the trend. So the concept and the whole point of this video is when you have a winner, you have to let it run. You have to let it run. You have to let it run. You got to sit on your hands. You have to let it run, and you have to have a mental exit where you say that's where enough is enough. And if we're not down there, then you don't do anything. That's the only way you can do it. That's really the only way to trade. And if you're not willing to do that, then you have to be willing to accept that you're gonna cut your winners short. You're gonna cut them early, and you're gonna miss out on the bigger gains. And that's unfortunate. So we have to train ourselves to try to do the right thing, and that's what a rules-based trading approach is. I hope you enjoyed this. This is actually a lesson that I keep reinforcing to myself. This is one that I share with everyone. So cheers.